Shell is selling off around half of its North Sea oil production as the oil giant continues its drive to divest around $30 billion worth of assets following its takeover last year of BG Group. Chrysaor, a private exploration and production company, will pay up to £3 billion for Shell's interests in 9 oil fields, as well as its 10% stake in another field. Together, those fields account for 115,000 barrels of crude oil per day. That's more than half of Shell's total North Sea production of 211,000 barrels a day. The gloom surrounding North Sea oil production has lifted considerably since Brent crude sunk to just $27 a barrel last February. Thanks to major producers agreeing to cut production, it's now more than double that price, but still just around half of what it cost in the summer of 2014. Well, I spoke to Chrysaor's chief executive, Phil Kirk, and asked him why he was buying the assets from Shell.
We're buying these assets from Shell because it's immediately going to catapult us to be the leading independent in the UK, focused on UK production. Day one, we're going to be about 115,000 barrels a day with 350 million barrels of 2P reserves and a staff of, as the transition goes through, around 400 highly competent people that we can use as a basis for growth.
I mean, Shell are a great company, though. What do you know that Shell doesn't?
I think, as you know, Shell bought BG Group plc last year in a world-class acquisition and promised the market they would divest 30 billion of assets. Really, that gives us the opportunity to acquire assets that probably wouldn't have been on the market otherwise. We pay a fair price and both parties are happy. I don't think it's that we know things different to Shell or are any better. We perhaps have a different way of tackling the to-do list.
I mean, the operating costs on these fields are just $15 a barrel. There aren't many more efficiency gains that can be wrought out of them, are there?
No, $15 a barrel is very competitive. It allows us to generate a significant amount of cash. Looking to the future, something I've always been passionate about, the easiest way to improve unit costs is to bring more hydrocarbons across the platforms.
So while there are parts of these reserves that you will hope to exploit that Shell perhaps wouldn't have?
I think in different ways around the portfolio there are reserves that we will drill and we'll seek to develop that maybe were immaterial for Shell or viewed in a global context wouldn't pass their hurdles, whereas for us who are focused on the UK with access to significant capital, we can make those decisions.
Now, you're taking on some 400 staff as part of this acquisition. How secure are all of those jobs?
I've been with the staff this afternoon, done a town hall down at the Shell building. I've said to them that as part of the transition, we're not looking to make any layoffs. We're preserving terms and conditions. And actually, the whole story is about growth. It's not about cost cutting. It is about efficiency and more hydrocarbons. And that was well received.
So this is obviously quite a big acquisition. It'll probably take you time to get your arms around it. But are you looking to do further acquisitions in the North Sea at some point in the future?
Yeah, we are, Ian. Our primary focus is obviously a safe transition. We've got all the regulators, partner approvals to go through. But we have more firepower, more capital. My backers and myself are interested in further acquisitions. And we think there will be the opportunity.
And what are your expectations on the price of Brent for the rest of the year?
As part of this deal, we've actually hedged out our Brent price at around about $55. So it's more academic to us. I think long term, we're slightly higher than that. We're not aggressive in our targets.
This is obviously a big vote of confidence in the UK continental shelf. Why is it, do you think, that some of the majors have been turning their back on the region?
A lot of the majors run global portfolios. They're looking for materiality. It's more difficult for them to run their business with incremental opportunities. I think that's one of the main reasons. A lot of maybe refocused and retrenched on the US or onshore opportunities. And to be honest, that opens the field for people like us. Something that my backers have spotted with myself. And I think we're on the cusp of a renaissance.